Hi all, and welcome back to the channel. Today we're talking about Palantir, ticker PLTR, and I'm going to start with something most people won't admit. Palantir is one of the most polarizing stocks in the market. Two smart investors can look at the exact same company and walk away with totally opposite conclusions. One side believes Palantir is a core building block of the AI future and could be worth significantly more over the next decade. The other side believes it's mostly hype, priced for perfection, and the stock will punish anyone who buys into the story too late. And here's the uncomfortable truth. Both sides have valid arguments. So in this video, I'm not here to hype Palantir or trash it. I'm going to explain what the company actually does in plain English, how it makes money, why it could win big, why it could disappoint, and then I'll give you a clear verdict at the end. But before we go any further, let's talk about price targets early so you understand the upside and downside you're dealing with. At the time of recording, Palantir is trading around $146 per share. These are not predictions or guarantees. These are scenario-based ranges that depend on how the business executes. In a bearish scenario where commercial growth slows, AI excitement cools off, competition wins deals, and investors decide Palantir shouldn't trade at a premium, the stock could realistically fall into the $90 to $110 range. That would be a painful drop, but it would reflect a reset in expectations rather than a collapse of the company. In a base case scenario, where Palantir continues to grow steadily, government revenue stays stable, commercial adoption improves gradually, and profitability continues to move higher, a reasonable valuation over the next couple of years would place the stock somewhere between $170 and $200. Solid returns, but not explosive. In a bullish scenario, where Palantir becomes a core platform for enterprise AI adoption, commercial growth accelerates meaningfully, customers expand usage across departments, and the market is willing to reward the company with a premium valuation. The stock could justify prices in the $230 to $270 range over a longer time horizon. The key thing to understand is this: Palantir is already priced for success. That means upside exists if execution is strong, but downside is very real if growth disappoints. Expectations and entry price matter a lot with a stock like this. Now that you have that context, let's make Palantir simple. Palantir builds software that helps massive organizations turn messy data into decisions. And when I say massive organizations, I mean governments, militaries, hospitals, energy companies, manufacturers, and large financial institutions. These organizations have data everywhere. Different departments, different databases, different systems that don't talk to each other, different rules about who can see what. Because everything is fragmented, leaders inside these organizations often can't answer basic questions quickly. Questions like, what is happening right now? Where are we losing money? Where are the risks? What needs attention today? Palantir's software connects these data sources, organizes them, applies permission controls, and helps teams model decisions on top of that data. You'll hear platform names like Gotham, Foundry, and AIP. You don't need to memorize them. The simple idea is this: Palantir helps organizations see their data clearly and act on it with control and accountability. Here's an important insight that makes this stock make more sense. Palantir isn't just selling AI. It's selling the infrastructure that makes AI usable in the real world. Most companies cannot just plug AI into everything. Their data is messy. There are privacy rules, security concerns, regulatory requirements, and real consequences if something goes wrong. Palantir positions itself as the control layer. Who can see what? What decisions were made? Why those decisions were made? That's powerful if AI adoption continues inside large organizations. Now let's talk about how Palantir actually makes money. Palantir sells large software contracts, often starting with a pilot project and expanding over time. These are not cheap monthly subscriptions. These are high-value relationships with big customers. Once a customer builds workflows around Palantir, switching becomes difficult, expensive, and risky. That's what people mean when they say the revenue is sticky. That's the bull view. But the bear side has a real point too. Large deals mean long sales cycles. Governments move slowly. Big enterprises move slowly. Deals can be delayed. Implementation takes time. That can lead to uneven quarters, and the stock can swing hard when expectations aren't met. This is why Palantir is volatile. It's not just about what the company does, it's about what the market expects it to become. And that leads us to the bull case. The strongest bullish argument is that AI is only as good as the data and controls behind it. Companies want AI, but they also want safety, transparency, and compliance. If Palantir becomes a standard platform that organizations use to run operations and deploy AI safely, the opportunity is massive. Another bullish point is durability. Government and defense spending isn't going away. Complex organizations will always need better systems to understand data and make decisions. Another key point is customer expansion. Many Palantir relationships start small. If the software works, it expands to more departments, more use cases, and more revenue over time. That's how software companies compound. Now let's talk about the bear case, because it matters just as much. Competition is everywhere. Cloud providers, consulting firms, internal engineering teams, and other software vendors all want the same budgets. The problem Palantir solves is real. The question is whether Palantir can win consistently and scale profitably. Valuation is also a risk. Palantir trades like a premium AI company. That means it needs to deliver strong execution. If growth is good but not great, the stock can still disappoint. And finally, deal lumpiness. Large contracts can create uneven results. One delayed deal can hurt sentiment, even if long-term fundamentals haven't changed. So how do you track whether Palantir is succeeding or not? There are 4 things I'd watch. First, commercial revenue growth. Government is stable, but commercial is where the big upside comes from. Second, profitability and cash flow. Profits lower risk. Third, customer expansion. Renewals matter, but expansion matters more. Fourth, whether adoption is becoming easier and faster. If onboarding becomes simpler, scaling becomes more realistic. So who is Palantir actually for? If you want stability, dividends, and low volatility, this probably isn't your stock. If you can handle volatility and you want exposure to enterprise AI adoption, Palantir can make sense as a smaller position that you can hold without panicking during drops. Here's the biggest mistake people make with stocks like this. They buy a great story with unrealistic expectations and then panic when reality sets in. With Palantir, expectations matter just as much as the business itself. So here's my verdict. Palantir is a watch list buy, and for some investors it's a small position buy, but it's not a go-all-in stock. If you own it, you stay disciplined. You track execution, you don't marry the story. And finally, remember this: you do not need Palantir to build wealth. Index funds and boring businesses work fine. Palantir is optional. It's a higher risk bet on AI adoption inside massive organizations. If you want a follow-up comparing Palantir to other AI stocks, let me know. And if this helped, consider subscribing. Thanks for watching.